Welcome to the Young CPA Success Show. If you're a young accounting professional, this podcast is your ultimate guide to navigating your early career. Join us as we share valuable insights, expert advice, and practical tips to help you kickstart your path to success and excel in the accounting industry. Let's embark on this exciting accounting journey together.
Hey, Joey, how's it going today?
Hey, Hannah, I'm good. How are you?
I am well. I am so excited about today's episode of the Young CPA Success Show. We have Blake Oliver with us, who is the founder and CEO of Earmark. And that was a phenomenal conversation. I don't know, how did you feel about it?
I thought that was, hey, you can tell that he's got his own podcast because he was like picking
Absolutely.
up things and doing the storytelling thing. Like you can tell this is not his first rodeo on the podcast.
Yeah.
I really enjoyed a lot of the conversation about like some things that we learned about earlier in our career that would maybe change some things. And he's very much a visionary. You can tell that he spent a lot of time
Absolutely.
kind of thinking about what's going on in the industry and maybe some of the challenges that, if you're younger in your career and you're, I'll steal from the story, but maybe you're stuck in an audit room and you're just auditing cash and you're like, why am I doing this? And what's my future look like? And how do I get out of this mess? If that's you, this is the podcast for you because we cover that. And he gives some really good tips and advice. What did you think?
I loved it. I love that he took an untraditional method to get to where he's at. I totally relate to that story, and we hear more about it in the actual podcast too. So I love that piece of it and the advice that he's able to give us, having taken this non-traditional method to get to where he's at, and just the insight that that's given him into this role and the future of what this role could be. He is absolutely a thought leader in this industry. So it would absolutely behoove you to follow him on all his social media outlets, as well as tune into this podcast. So I'm really excited for y'all to hear more about it and to dive into it.
Enjoy the show. You're in Scottsdale. Did I hear that correctly?
Yeah, Scottsdale, Arizona. It's raining today. Finally,
I was going to say
are here.
We're about 8 hours east of you, and we've got two tropical storms on either side of us, and none of the rain is making it here. So we're just like, this is insane. So
well, I'm really looking forward to it cooling down. It's been the hottest summer on record here in Phoenix.
Yeah.
So I love to hike. It's been tough for me, but I've been swimming a lot. So
That's
if you
nice.
can get in
Good
the
alternative.
cool down, it's good. I'm really. It's interesting, actually. This ties into the discussion we're going to have about accounting and the talent pipeline and all that stuff. I think not enough accountants get physical activity. It's a problem, right? We don't have enough time in busy season. We neglect our physical and mental health. We don't spend enough time with our families. We don't spend enough time on our bodies. And ever since I started getting in shape later in life, I have been so much happier, so much more satisfied with my work. And I think actually that's like one of the arguments against busy season is like the physical toll it takes on your body. And I don't think we talk about that enough in the profession.
I notice such a difference in how I feel during the day if I will intentionally take a break and go walk outside. I have a walking treadmill that I put under my desk for days when it's just like rainy or cold and I can't get outside. But my mental just space is so much better if I can literally step away, walk outside, especially working from home too. Like being able just that change of scenery, fresh air, vitamin D, all the things, like world of difference. So I can certainly attest to what you're saying.
It's really funny you mentioned it because I've got two stories on this. The first one is, when I think back to my first year in tax season, I used to joke about this all the time. I was in Manhattan, Kansas. I was working in my college town, living with my college roommates, doing all that thing. But I was working busy seasons because I was doing the internship and those types of things. And that first 4 months was when I learned that the local Pizza Hut in Manhattan, Kansas did stuffed crust Tuesdays on their buffet. And no joke, I didn't get the freshman 15. I didn't get the junior 20. I got the first tax season 30 that was put on that first year. Because to your point, I wasn't exercising. I wasn't doing any of those types of things. And you're 100% correct that this is just kind of how it's gonna go. if you're not investing in that and you don't have the time, it just snowballs and gets out of control.
So let me run an idea by you, one of my crazy ideas. So overtime, paying staff for overtime. Some firms do it, some firms don't. Most accounting staff are exempt from overtime in a lot of states, right? Because they're paid over a certain threshold, they're professionals, especially if you're a CPA, you can be exempt from overtime. And I have thought that one of the solutions to the talent pipeline problem is, to get more people into the profession is like start paying people for overtime. If the state societies and the AICPA and NASBA all advocated and maybe even helped pass legislation to pay overtime, like we would be more, competitive as a profession. Now, I know there's a lot of accounting firm owners out there, who would say, oh no, that's going to increase my costs, right? Like would fight against that.
But if they fight against it, though, could they not probably be more creative and finding solutions to where the overtime isn't necessary? Like, wouldn't that promote that thought process?
Yeah. I mean, we encourage firms, to treat their staff well, right? And some do. I would say it's probably 50-50. You've got 50% of firms that are taking care of their staff, looking out for their well-being, but then you got this other 50% that are giving the profession a bad name. Maybe even if it's less than 50%, those are the firms that are ruining people's experience. And those are the people who go on Reddit and then write about this horrible experience they're having working for this partner that just abuses them. So if we don't do something about those partners and those firms, how do we repair the reputation of the profession? That's what I think. And yeah, like what we're talking about goes to this, right? Just because you sit in front of a computer all day doesn't mean that the work you do shouldn't be limited, right? People can only work so much in front of a computer before it starts to hurt their well-being, physically, mentally. And so all these overtime protections that we've given to like factory workers and people who do physical labor, like I think that should apply to us too. Just because you work with your brain doesn't mean that it's not a muscle that you're using. So that's my crazy idea. Call me a socialist if you want. I'm not.
I don't think it's so crazy.
It's the fact that we even have to make that joke is part of the problem, right? Where you're starting to think about things, and it's, I think Hannah's point's great, where it's like we've got there can be a capitalistic based solution to this problem, which is if you're having to pay overtime, then now the business decision is, well, we've got to be more efficient with that so that we're able to create a better environment to foster that. And it's
I'm all about connecting the if you want to change people's behavior, you got to incentivize them with money. I think that's something we as accountants understand, right? That like monetary incentives work really well. So, but we've totally disconnected that in our own profession. We're totally hypocritical when it comes to that in many ways.
So here's a question. I'm curious how far back we can go. One of the things that I always try to think about when I think about a current problem is like, how did we get here? Is that something that you spend any amount of time thinking about outside of this one issue? So if you could summarize for us, how did we get here?
Well, I think it goes all the way back to accounting theory, which was developed 100 years ago. I don't know. Did you guys have to take like an accounting history class in school?
I remember Luca Pacioli. That's a name that I remember.
Yeah.
I just take math history, but not accounting history.
Yeah.
Isn't that funny? Like, so we have this wonderful profession, but we don't teach anybody about the history of it. And so just a few years ago, I was, curious. Maybe I had too much time on my hands or something. So I started like researching the history of accounting and just reading some books about it. There's a few good ones. And I learned that, modern accounting theory is only like 100 to 150 years old. And it was developed during the era of railroads because we had all these railroad barons in the United States, these corporations that spun up, spending massive amounts of capital on railroads. And most of the money was coming from European investors. All the old money in Europe was pouring their family estates essentially into railroads and getting rich, or not, because some of these enterprises were total frauds. And there was no accounting standards. There was not even a standard concept of depreciation at the time. And so how can you measure the profitability of something like a railroad, which has these huge capital expenses, without depreciation. And so it was these accountants from Scotland who were hired by these European investors to go audit railroad companies, and they invented depreciation. Mm-hmm. They invented this whole balance sheet profit and loss thing that we take for granted today. Did not exist before then. And it was all designed to protect these investors so that they could understand what are these companies doing with our assets? Are they generating a profit? And that's like Price Waterhouse. I think Waterhouse was like a Scottish accountant or something. One of them anyway, right? Like a lot of these firms that today exist, the big four, were founded by Scottish chartered accountants. And Scotland just happened to be the first country in the world to have chartered accountants, to have like this license. That's why they got the job. So what does this have to do with how we think as accountants? Well, modern accounting theory is still basically the same as it was back then. We have this idea of capitalizing assets, and we depreciate them, right? It's all about adjusting the timing of revenue and expense so that it's different than cash flows, essentially, right? We put stuff on the balance sheet to hold it there, and then we take it off to put it on the P&L at the right time. That's about as simple as I can explain it. And it really hasn't changed in 100 years since it was formalized after the Great Depression, and we locked everything in with GAAP and with the SEC and with the Financial Accounting Standards Board and all that. It hasn't really changed. But our economy in the 70s went from being one that was primarily based on manufacturing to one that was based on intangible assets and services. And the accounting didn't change. So we have this strange situation where we have businesses where the entire value of the company is based on intangible assets, but accounting does not do a very good job of understanding intangible assets. So we have a situation where Netflix is reporting fantastic results, and then they put out a press release about how their subscriber count dropped, and it tanks. Their stock tanks, even though everything else is looking good on the financials, right? They've got strong cash flows. They've got a good P&L, good balance sheet. What the investors care about is subscribers because it's a subscription business. But there's no standard GAAP metrics for subscription businesses. So we're living in a crazy era where like the accounting is supposed to be the language of business, but it hasn't adapted. It hasn't changed because we locked it all in with all this regulation almost 100 years ago. And it's gotten more complex, but it hasn't really gotten better at describing anything other than, a manufacturing type of business or a railroad, physical capital intensive businesses. And there's this whole era now of, I've seen stats that like 80, 90% of the market value of like the NASDAQ is intangibles. And yet we still struggle to describe this with our accounting theory. So I don't know if that answers your question, but I think that is a big blocker. Right? It's a big reason that accountants don't understand subscription businesses that well, why we struggle to convert our firms to subscription business, why we still track time and we bill for time. Like like every employee in our firm is a piece of equipment making widgets. Oof. It's built into our mindset through the theory.
It's interesting because I think there's so many things that I think about, and I just took some CPE classes last week. Unfortunately, not on Earmark. I need to get that up and running for myself because I do enjoy listening to podcasts and stuff like that on a go, just going around town and stuff like that. But it was talking a lot about how one of the things that's going on right now is we're still trying to figure out how to handle blockchain and crypto and having to completely rewrite the rules for how do you even handle an investment in cryptocurrency that many companies, that's all they have. That's all they do.
Yeah.
And there's just no mechanism to do it on the balance sheet.
And I think we're getting ahead of ourselves too, because again, like our accounting theory, I mean, these are digital assets we're talking about, right? Mm-hmm. And if the accounting theory doesn't understand intangibles, which a digital asset is an intangible, then, how are we ever going to tackle blockchain and crypto? I think we need to go back to our roots and we need to really do either of you, Hannah, Joey, do either of you spend time on like SaaS metrics, like CAC and LTV and all these like software company kind of like metrics that they use to measure themselves? Because
I do not.
I spent a couple of years in technology companies, and the thing that blew my mind was we never looked at the P&L. We never looked at the GAAP financial statements, even though we produced them. The only thing we ever looked at were these SaaS metrics, because that's what mattered to our business. And then there was this disconnect in my head because the GAAP that I was taught in school was not relevant to this technology company and most technology companies that are out there. They're not standardized. Like, they've created this whole basically alternative framework of accounting and financial reporting that is not at all in GAAP, and nobody learns it in school in accounting.
Well, that probably explains why for so many years you see these big unicorn tech companies and you look at it and like, how on earth is this company growing at this metric and getting this amount of outside equity that's at risk when they've never, ever, ever turned a profit? And the answer is other metrics.
Yeah. So the answer is that traditional GAAP always shows subscription-based businesses as either being extremely unprofitable or losing money if they're being run properly. Think about that. If you're running a subscription business the right way, it will not show a profit on a GAAP basis. And that's because GAAP says that sales and marketing expense is always a period expense. In a software or a subscription business, your sales and marketing expense is a customer acquisition expense. It's actually a capital investment, the way they think about it. So I'm acquiring subscribers, and subscribers are like an asset. They're an annuity, right? Because I can calculate how long I'm going to have them. So I know if they're going to stick with me for 5, 6, 7, 8, 9, 10 years. I know what the value of that subscriber is based on all the metrics that I'm tracking, my churn rate, my average contract value. So I know that I can spend X dollars to acquire a customer and hit my targets. And I'm actually adding this asset on my balance sheet, not my GAAP balance sheet, but my subscription-based business balance sheet. And GAAP says I have to expense that. So I look like I'm losing money, even though I'm adding an asset, because we are not allowed to capitalize our subscribers. Now, I'm not saying necessarily that we should be able to, that that's exactly what should happen. But maybe if we at least reported those numbers, it would explain the loss that we're seeing on a GAAP basis. And this is why Amazon looked so bad for so many years. It was really adding Prime subscribers, and that's what Jeff Bezos was all about. He knew that if he just added Prime subscribers, his business would succeed. And on a GAAP basis, he looked like he was spending all the money they were making. And really, he was, building cash flows in the future. So to me, it's like that's a huge failing of generally accepted accounting principles. And
I think these are just a few examples in industries of where this applies, but I think that it is across the board. I would say that there is a big, huge gap between what we are learning in our classrooms, in college, on the CPA exam, versus what actual work experience looks like.
100%. Yeah.
That's just a gap that we need to find a bridge across of some kind in order to change the industry.
It's gotten so big that I have people tell me that like almost nothing that they learned in school was useful to them on the job. I mean, yeah, you need to know your accounting 1 and 2 and maybe your intermediate, and you need to know a little bit of cost accounting and but like most of what you learn in school is not relevant to what you do on the job.
So true.
I don't think it used to be that way, right? So, yeah, how do you get people to want to be accounting majors when that's the situation?
It's interesting. We were talking in our pre-show meeting on Friday, and the question I asked Hannah was, when was the last time that you did a what's it called when you write down an impairment of goodwill? Yeah. Like, when was the last time you actually physically impaired goodwill? Because we spent a month on that.
My answer was literally never.
Never.
Or the thing that was so frustrating for me was we spent all this time on consolidations. It's like, unless you happen to be working in a multinational corporation that does a lot of consolidations, like it's just one of those things you're going to learn on the job to do it the right way. Like, we learned it kind of in theory. I don't know. It never stuck for me. It seemed like a giant waste of time.
we have so much technology now too that helps us through so many of these things. I'm thinking one of my clients that I do have to do a consolidation for is like the technology does it for me. Sure, I understand the general concept. I know what to look for, eliminating entries and things of that nature, but the software is doing it for me.
We just change it around on how we code it so that it's automated and it's done.
Yeah.
Which is fantastic.
Yeah, it's tough. It's tough. Like the generation of professors, I don't know about your professors, but mine were kind of on the older side. So it's like they were working in like the 60s, the 70s, maybe the 80s. It's been a long time since they were in the workforce, and things have changed a lot.
I was thinking through that this morning. There is a disconnect between people who are in the classrooms, even on the high school level. I think it starts even at that place in terms of like the business and finance courses that kids are going through in high school. There's such a disconnect between the people who are in the classrooms versus what's actually going on in the industry, because maybe they haven't worked in the industry, or maybe they're just by nature just not keeping up with what's going on either too. So the communication of how our industry has changed is not permeating through to the classroom in any capacity, or if it is, it's in a small capacity.
I think it's a problem with traditional education in general. I don't think it's limited to accounting. The world is changing so fast that by the time concepts get into the curriculum, which, by the way, a curriculum takes years and years and years to change, if it ever does, by the time it gets in there, it's out of date. I mean, they still haven't added in like the technology classes that everybody's been asking for into the accounting curriculum. How do you actually use an ERP system or a QuickBooks or a GL? Like, I was learning it on paper, and I didn't get my CPA all that long ago because I'm a career changer. So I don't even know if I wonder actually if traditional college education will be what it is now in 10 or 20 years. If because of the shortage of workers, a lot of people will just start skipping college, go straight to professional certifications that they can earn without a college degree. It's a lot of time to invest in something that doesn't necessarily deliver a huge value add for you. I mean, compared to what you can learn. I mean, there's people going and getting Google career certificates and making 6 figures without a college degree. So I'm not saying like at the highest tiers, the top tier schools, that those won't still be full. But think about all these, schools where many students don't graduate, where if they do, they don't really increase their earnings all that much. Like,
well, and the cost benefit of that has been changed. I mean, it changed a lot for my generation. I graduated high school in 2006. So I've told people this before. When I was in high school, the question was not, are you going to college? It's where are you going to college? And then the unknown of that was how much you were going to spend on that degree. And it's, it was when you just run the numbers, and this is coming from a bit of a tax background. My wife is also a tax accountant. I came from a tax background, and we've had this conversation after she got her CPA. She was like, I'm not going to use any of this. Becoming a tax accountant could 100% be a 2-year trade degree that you get from any level of college that you want to go to. If you want to go the community college route, beautiful. That's a wonderful route for people. And she's like, I don't need CPAs to do this. I just need somebody who knows how the things flow, what sort of things to do, has some good people skills to be able to ask these questions and can think. I don't need them to know how to calculate, the intangible life of whatever, or do this. I just need them to know how to do a tax return.
Or take, algebra 2.
Yeah.
Or trigonometry or calculus or.
Yeah.
I mean, there's something to be said for, a liberal arts education, like broad education. But I mean, there's a lot that we learn that isn't necessary for most people. I feel like there was this mission decades ago to make sure that every American got a college education. That was the American dream, right? Everybody's going to go get a college education, but I don't think it makes sense. Not everyone needs one. In Europe, they don't do that. In Europe, they start tracking people in high school. You basically decide if you're going to be college path, or you're going to go into like a trade or a profession, and you don't have to go do all the extra education. You get what you need. And so maybe we're going to do something like that here in this country. The problem is there's still so many jobs where it's like bachelor's degree required. It's like a gatekeeping mechanism. I mean, we do that when with the CPA exam, we go even farther. We say, oh, you got to have 5 years of education to sit for the CPA exam. I mean, let's just make it 20% harder for no reason, apparently.
So I'm sure you've met Jamie Na in our office before on certain things. And Jamie and I love to have this conversation about like what our hottest take is. And my hottest take is that the CPA is, for a lot of jobs, the most overrated, certification that you can have. I know, sorry, accountants, everybody. Yeah, I can be reached, on the LinkedIn's.
People are going to start coming for you, Joey.
I know they're going to start coming for me. I needed to figure out whose email address in the office to send all the complaints to. Maybe we send them to Dave Hartley. Send all your complaints to Dave Hartley. But it's one of those things, like, as we've started moving away from, like, if you're not going to do audit, if you're not going to do the type of work there, there's like 3 certifications that I can think of that more suit somebody to what we need in our job, and that don't require 150 hours to get that done.
I think it's a real shame I'm a CPA, and I think it's a real shame what we have done with the CPA to make it so exclusionary, adding the 5th year.
Work requirements?
Is
it like a 2 to 3 years?
Well, they reduced the work requirement, so it's like 1 year in most places. But most states, a lot of states still require that you do audit to get your CPA. I was lucky to be licensed in California, where they got rid of that. So now you don't have to do audit to become a CPA. But yeah, it's so tied to audit. And actually, like, the root problem, in my opinion, of like the CPA pipeline issue is that 2/3 of grads go into audit, and then these audit firms burn them out and they quit the profession after 2 or 3 years. And they don't go work at a regional firm or a small firm. They just quit entirely because they're like, I'm out. This accounting thing is not what I want to do with my life. And so we've got to like unlink the CPA from that in order to bring it into the future. And unfortunately, there's this like educational industrial complex that seems to exist with, audit professors and Big Four partners who retire and then go teach and then tell their students, you have to go Big Four in order to succeed, all that stuff. But you don't have to. Accounting can be so great if you go to a small firm or a regional firm, or you go directly to a corporation. There's so many opportunities, and these students are not educated about it at all. They're just told, here's the path you got to take. It's get your 5th year, go work for the Big Four, get your CPA, work. And nobody wants to do that anymore,
So one thing, I'm curious to get your thoughts on this too. One thing that I've said is that most CPA firms are going to struggle with, and it's going to start happening sooner rather than later. Again, painting with a super broad brush here. Gen Z in particular is the most entrepreneurial generation of Americans that we've ever raised. And the reason for that is, it used to be, in order to start a business, to start a brand, to do something, you had to have capital, right? You had to have X amount of money saved up so you could buy a piece of equipment or something or whatever. But in the digital economy, all you need is this.
Yep.
And good luck finding someone, in today's society who doesn't have one of those. And that's the thing I think most CPA firms are going to struggle with, because the business model is based upon exactly what you said. It's, we're going to get some associates, we're going to grind them, we're going to lose 80%. The 20% that rise are going to be your future managers and senior managers and partners and so on and so forth. And we're just okay with the churn.
Yeah.
And I think most CPA firms are really going to struggle finding in this next generation someone who's like, well, why would I do that for you when I can just do that same level of work for myself and build my future that way?
If I'm going to hustle, I might as well be building my own brand.
Exactly.
Building my own business.
Exactly.
Yeah. Well, I think you're going to see more firms do employee stock ownership plans like BDO just did, which, I mean, that could go sideways, but it could also be really successful, because now you can say, come work for us. You're going to start earning equity on day one. That's pretty cool.
Yeah.
But they're also going to have to start treating their employees more like owners and less like, just workers who are going to get worked.
Yeah.
If that's going to work, I think.
Yeah, because this could be like, well, I'm an owner. And they're like, yeah, but you're not that kind of owner.
Yeah.
And then the question would be, okay, well, then how do I become that kind of owner?
Yeah. there's this division, and this goes back to this old way of thinking.
Mm-hmm.
In accounting firms, we have, here's the partners, here's the staff, and there's this wall between them. And you know, the people who think and make strategic decisions are partners, and the people who work and execute those decisions are the workers. And that very much seems to me like an old mindset, a mindset from, 1880 or 1910,
Mm-hmm.
and not from 2023. So Gen Z wants to have input, right? They want to have an impact. They don't want to just work and be told what to do.
Yeah, I think they absolutely want to do work that's more meaningful for them and for their purpose and their goals. And I think that accounting can be that. I feel very fulfilled in my role, but I absolutely did not think that what I'm doing today in my mid 30s was, if you were telling me at 22 that this is what I was going to be doing and what my accounting career was going to look like, I would have laughed at you. And so I think there is this perception of what an accountant looks like, that we have to change the posture even of ourselves and how we talk to people about what we do. Kind of like what you said, Joey, going back to that conversation you were having with somebody of like, ooh, are you sure? Like, you want to go into accounting? Instead of saying, like, instead of posing that as like, that's awesome. Like, accounting is great. There's so many different things you can do with that and be really fulfilled in what you do. And that next generation, it's just even more important to them than prior generations, for sure.
Mm-hmm. Yeah. So what do you think, Hannah, what do you think the next generation accountant looks like?
Oh gosh, I think the next generation accountant looks more like an advisor. I really think it's shifting more towards just having those soft skills, advising people, not just even on their taxes, just on financial decisions, and posing more in that role. And because that leads itself because of automation and AI and the integration of technologies, we're gonna have to be really strong in that way. But I think that allows itself and opens the door for some really meaningful relationships to be developed with clients, and feeling fulfilled and being able to help in a way that maybe as an accountant it hasn't always been looked at, that we could help in that way.
Yeah, I agree. I think if we can be in roles where we're helping people, that's satisfying. And if you're in that role where you're auditing a big multinational corporation, you're producing work papers that are going to get filed away that nobody's ever going to see again, like it's hard to feel meaning in that work. Oh, I'm defending the capital markets of, the United States. Hard to feel that way, I think. But if we're working with small businesses, if we're meeting with people, I mean, that was my favorite thing about owning my own firm and being a freelancer before that, was like just having an impact on these small business owners, helping them out with something that was really stressful for them and making it easy. And the gratitude that I received after I did a good job, I love that feeling.
I really love educating my clients too, and just helping to, like, seeing the light bulb go off, like when we're talking through a forecast or their KPIs or a financial statement, like just seeing that light bulb go off, like that is also very fulfilling to me too, is being able to like tell the story that the financials tell to somebody who's not in it, like we're in it and looking at it every single day. Like, that piece is really, really fulfilling. And I think it's going to become an even larger factor for this role as we go into the future.
So Joey, I think you mentioned you're in tax.
So that's where my background is. So my background was very tax heavy. It's what my wife still does. What my parents both did.
Yeah.
Your point about the Big Four and how hard you get pushed into that is, it brought back a little bit of trauma from when I was in school. And thankfully, like, I had both my parents did the Big Four game, so I knew kind of what that was going into it. But you're right. Nobody was sitting there and saying like, who's, go find a good mid-level regional firm. It was, go to the Big Four. And, if you had the grades to do it, that's sort of where they just kind of pushed you. And man,
it's like, for me,
overwhelming.
So your parents were Big Four.
But both my parents were Big Four. My wife is an accountant. My brother was an accountant before he left. My cousin's an accountant-ish. He works for Deloitte on their consulting side. My grandfather was an accountant. Like, it's like we didn't know what else to do, which was a bit of a problem. It's like, why couldn't we have been dentists? That would have been fun.
Well, actually, they're not having the best time right now.
No, they're not.
There's a dentist in my neighborhood is complaining about how all of these private equity firms are buying up all the dental practices and making it hard for him to compete as an independent dentist. So they're having trouble too, I guess. But I want to dig into that more, Joey, with you. Like, so you felt like pushed to go Big Four. Did you do that, or did you do regional? Like, what did you do after college?
No, I got really fortunate. So I went to Kansas State University. Shout out to the Wildcats. And we now have a presence in the Phoenix market, which I'm very excited for with Arizona State. But so I had, go Sun Devils. I had a wonderful relationship with two of my professors. One of which was like our introductory accountant guy, is a wonderful man named Fred Smith, and another was our tax professor, a guy named Dan Fisher. And both of them were hugely influential in terms of helping me figure out where I wanted to go. And both of them had worked for the regional firm based out of Manhattan, a firm called Sink Gordon and Associates, which is, I think we were like 50 or 60 people and had some satellite offices in different places. So that's where I got started. And it was one of those things exactly like you would imagine. It's hours and rate and, kind of heavy tax work. But I got some really nice exposure to a lot of different things when other my friends were doing their internships and they just calculated DPAD. And it's like, that's all we did for an entire internship was do this one calculation 95 times for 95 different clients. And you never see any other part of the product. They had never had any idea of whether that was a good outcome, a bad outcome. It just was.
So I had to
and I hated that.
I just had to search Google for what is DPAD.
Oh, yeah. and this is showing my age a little bit. Like DPAD is now defunct. It's now defunct. It's gone. It was replaced as part of the
domestic production activities deduction. Amazing. Yeah. See, that's not going to be very fulfilling. Is when you're just like a cog in a machine of calculations, right? What about you, Hannah?
Yeah, so I am buckle up because I took an adventure in terms of to get to where I am. So I started out in freshman year of college. I knew I wanted to do accounting. I did an internship with my family as Native Americans. I did an internship with the CFO of our tribe during their annual audit, and I saw what audit looked like, and I was like, absolutely not. Like, that is not what I want to do with my life. That is not what I signed up for. And so I was like, maybe I want to do something different. Like, I explored doing math education or something of that nature. And so I took a lot of math classes because I knew like that was I'm pretty good at that. And then ended up meeting my husband. I got married before I even finished college, and he is about 7 years older than me. So he was a different part of his career. We started our family before I finished college, but because of having the background that I did, I always worked in an accounting role. Like, I excelled up to controller level, had my kids, and then realized, okay.
So you didn't go public accounting. You were just doing corporate.
I worked in industry. Yeah, exactly. Yeah. So I worked, and I realized I was like, okay, this is pretty much all it's ever going to be if I don't finish my degree, get my CPA license. But at that point in my career, I was like, I have really young kids and I can't do that. So I left the industry completely, and I became a licensed insurance agent. So I did that for a few years, quickly rose to junior partner of our agency, and I took on the accounting, budgeting, forecasting role in our agency. And I was like, this is my passion. Like, I need to see this through. My kids are a little bit older now and I can do it. So I actually completed my degree 3 or 4 years ago. I did it as it was a program where
I have to stop you for a second. So you got to controller without a degree.
I did.
Yeah. Okay.
Yeah.
That's impressive.
Yeah, I did.
Your work spoke for itself.
It did. It really did up to that point. And so I did a program for my degree where it was essentially like work at your own pace. Like, I completed 90 credit hours in 3 months because I could go and just like take an exam. And I'd worked in the industry for so long. I knew what I was doing. Like, I just tested. I think I had to study for like business law. Like, that was the one that I really had to study for. But at that point I completed my degree and dove back into the industry from that point. So mine is very untraditional in terms of how I've gotten here. And I'm actually studying for the CPA exam now still.
Oh, all right.
Yeah, I'm in the process.
Well,
yeah.
I'm sure you'll do it. I mean, like, based on what you've just said, I don't doubt you
Yeah.
in the slightest. That's awesome.
Yeah, it's something that like I've always wanted to do. So like for myself, like kind of speaking of what Joey said, I don't even feel at this point like it's something like I need to like be fulfilled in my career at this point. But it's something that I wanted for me, and I want to be able to say that I've done it. So yeah.
For me, I'm a career changer, right? I got a bachelor's of music, and then I realized that I didn't want to be a musician for a living.
That's a tough life in its own.
Yeah. Well, I was privileged. I grew up in a household where I didn't ever worry about money, and I didn't understand it. And so then I got out into the real world, and I'm like calculating my paycheck, working at Starbucks, playing gigs, weddings where I'd get paid like $100 to drive 50 miles. And I'm like, my bank account is going down every month. I don't understand. Why doesn't this bohemian lifestyle work? And that's how I got into thinking about money and numbers for the first time in my life when I was like 22. And I got fascinated with it because I had to solve my own financial problems. And yeah, it led me to a career in bookkeeping and then the CPA and all that. It's funny how sometimes, you can get to CPA or being an accountant, and it isn't that traditional pathway that everyone is told. And we tend to be the people who stick, right? Like, we're not the ones quitting. We're the ones who came into it. We like it.
And there's some things too when I think about, thinking back to 25-year-old me getting started, where I think there was a lot that maybe this would be an interesting topic to think about in terms of, long term, like what advice would you give to someone coming out of school today? I think a lot about what Hannah was saying about the types of skills that you need. And I almost think accounting has it's like we have a marketing PR problem, right? Because every time you talk to someone about being an accountant, they're like, oh, I hate math. I could never do an accountant. It's like, do you know how little math I do? I do like no math. Yeah. I have not done math in forever because I've got a calculator or a program or something that's going to do it for me. And I think there's so many kids out there who just don't realize, like, there's what they think. And it reminds me of those memes that used to be on Facebook, right? Where it's like, here's what my friends think I do, what my family think I do, but this is what I actually do. Yeah. Right.
Yeah. And accounting is totally misunderstood.
Totally. Yeah. And I'm wondering, like, what sort of things we can do to talk to people about this. Cause I think had I known 2 to 3 years into my career, like what the next 10 to 15 years of my career could have looked like, and that it didn't equal always just doing payroll entries or doing the type of stuff that you do as an entry-level accountant, that would have really changed my thought process about how I would have handled the first 5 years of my career. Because I did a little bit like Hannah. I kind of bounced around until I found something that really stuck.
Yep.
And the downside of that was I had to move a lot. I didn't get to put down roots. I kind of, my 20s were effectively a wasted decade. I didn't really start figuring stuff out until my 30th birthday. So
here's the advice I would give somebody who's going to college or is in college right now. It's that the advice you hear from your elders is often very out of date by the time it gets to you. So example in my own life was my parents grew up in the era of cheap college. And if you went and you got a college degree, it didn't matter what you majored in, you could get a good job. So that was their advice to me. It was like, Blake, you don't need to figure out what you want to do with your life. Just go major in whatever you want and you'll be fine. Because they grew up in a time when, they graduated from college in, like the 70s. There are plenty of jobs for anyone with a college degree. And then they had the 80s, and it was just like, a great economic boom. So I went to college and I majored in music because I said, it doesn't matter what you major in. And then the Great Recession hit. And then it very much did matter what you majored in because nobody wanted to hire a music major, even though I had a degree from a top university. So that advice was bad. It worked for their time, but not for our time. And so that's what you always got to think about is like what your professors are telling you or what your parents are telling you is not always like just because it was true once doesn't mean it's going to be true for you.
Mm-hmm.
And so I think, based on what I see in the marketplace, with the changing nature of accounting and the needs of companies, that you're actually going to benefit more from just going to places where you can learn as much as possible. Don't get that experience where you're just doing a single calculation for 90 different companies, or all you're doing is auditing cash for 2 years. Like, that's a waste of your time. What's more important is that you learn. So go to a firm where you can learn, or go to a corporate job where you're going to get a lot of experience and exposure to different areas, like a boss that will move you around so you can learn different things. I think that's more important. Oh, and one where you can learn technology, where you're not going to be stuck in the same old tools. Because if you don't learn the tech, how can you go to a job where you are going to have to use new tech, and if you don't know it? So,
well, and fintech is going to solve a lot of. It would solve a lot of the frustrations from the early part of my career, right? In terms of, up until 3 years ago, I was still manually calculating payroll for a company.
Yeah.
That refused to use a fintech solution for payroll.
Yeah, that's amazing.
Yeah.
I couldn't imagine doing things the old way. When I started doing bookkeeping, I was keying transactions in. It was basically data entry. And I liked doing it because it was like mindless. I could put on music and I could just do it at night. And the whole thing changed in the course of just a few years. Cloud-based accounting tools, automating all that stuff. I built a business doing it, cut my time by 80, 90%. And what's really exciting now is that all that benefit we saw in client accounting services and bookkeeping, that, Summit has built an entire firm on.
It's the foundation of everything for us.
Right? All that automation, that's all going to come for all the more traditional areas, tax and audit, because AI is going to do it. Because tax and audit, you can't automate that with rules. There's just too much complexity, right? And too much judgment. But AI can handle complexity and judgment. So I think you're going to see 80, 90% reduction in hours on traditional audit and tax jobs. That's going to totally turn these firms upside down because they're billing for time. So they're going to have to change the business model, just like I did, right? I couldn't bill for time once I'd automated the bookkeeping work. I had to bill fixed fees. I had to do subscription pricing. All these audit and tax firms are going to have to do the same thing, or they're going to automate themselves out of work, or they're not going to be competitive anymore because they can't hire bodies to fill all these roles that you need to do it manually. So I'm bullish on like AI fixing a lot of the problems, or at least being a catalyst to fix a lot of the problems we have in our profession. That's my hope.
The other thing that's going to fix the profession too is we've got people like you who are thinking about it. I guess I'd include all three of us in here on this call trying to think
the
about
fact that we're having this conversation speaks for itself. Yeah.
Right.
And I love the fact that you're doing this show, because I don't think there's enough content created by young accountants for young accountants, and I just turned 40. I guess I still count as young because the average firm owner is 60 or older.
Totally.
I don't know, but I guess I'm middle-aged now, technically. But it's so much of the messaging in this profession has been top down, and it's been from like retired people who now run state societies and our professional leadership organizations. And it's like they're just totally out of touch with young people. And that's not an insult. That's just the nature of it. Like, how can you be in touch with people in their 20s when you're 60 plus? You can't really.
I struggle with that at 36.
Yeah, right.
Feeling like I've lost touch with the 20-year-olds.
Well, I got an 8-year-old, so he helps me at least with the lingo. Like
I'm right there with you. I've got a 12-year-old, 9-year-old, and an 8-year-old, and they help me. They keep me on the up and up. I know.
Bruh, you're so sus.
Bruh. Yeah, I've gone from mama to bruh. Yeah, bruh.
Mm-hmm. It's for people without children must think, what the heck are they talking about right now? Like, what is that? And my wife explained it to me. She's like, Blake, bruh is just the new dude.
Absolutely.
We said dude. He says bruh. I'm like, dude is such a better word. And then I realized I've gotten old because I'm now criticizing my son's,
vernacular.
I'm saying his vernacular. I'm saying that my vernacular is better than his vernacular. Uh-oh.
It comes for all of us, man. It comes for all of us at some point.
But, if he decides to become an accountant, I certainly hope that not just the lingo will change, that the pathways will change, right? We need multiple pathways. We can't just have one pathway. That's the problem. Right. It's just there's one pathway, and it's not appealing. We need more competition, right? We need a market economy system of pathways.
Well, and I think the other thing that needs to happen is I think the folks who are doing the work, and those of us who are doing those things, need to understand the value that we provide to the process too. It's something I remind my clients all the time on the consulting piece. When you're taking care of your employees are going to take care of you. Because let me tell you, the partners don't want to do all that work, guys. They do not want to do any of that work. They want to do other things. So understand your value and what you provide to this thing. And I mean, that's the thing that's always kind of blown my mind about accounting is like, how have we not figured out, and I'll probably get yelled at for this too by a certain group of people. How have we not figured out how to have like an accounting union yet?
Well, isn't that what the associations are supposed to be? Your state society is advocating for you as an accountant, as a CPA, at least as a CPA, right?
Are they advocating for me, or are they advocating for the partners? Who are they advocating for?
Well, I say follow the money. Mm-hmm. Who pays for all those dues?
Mm-hmm.
Usually it's the firm. And so that's who they advocate for. They advocate for the firm. But I think that they would be better served if they advocated not just for the firm, but also for the people working in those firms, because firms are just groups of people, right?
Mm-hmm. Yeah.
And that's actually what I would love to see associations do, is advocate for the staff.
Kind of be the, because we...
here's an idea. Mm-hmm. This is another one of my crazy ideas. Let me get your take on this. Create a certification for firms for work-life balance, for a positive workplace, healthy workplace. And you would measure things like, how many hours are the staff working during busy season? Do they have flexibility? What's your parental leave situation? Do surveys, all that sort of thing. And if you pass, with a certain score, you get a badge you can put on your website, and you can advertise that you are a, AI CPA, great place to work.
Well, you can start delving into some other things too. You can look at things like psychological safety. You can look at things like DEI initiatives, those types of things. And really have that independently monitored. Yeah.
The bullying, right? Like the surveys, there have been surveys of firms that find that, I think like at EY in Australia, they have a huge problem with like bullying and people feeling like uncomfortable. Like it's like more than 10% of people say in those firms that they have experienced like negative incidents. Mm-hmm. Like it's way too many, So yeah, we can do something about it. But
I don't think your ideas are so crazy.
They're not.
I think they're right on par for what we need to see in our industry.
And you know what? It would be a revenue generator too, because it's, you'd have to audit these firms every so often to make sure they're living up to what they promised. So that could help. I don't know. I'm full of crazy ideas. That's the beauty of being a podcaster, is that I get to have the ideas. I don't have to execute them.
You just get to think and then expound and then say, okay, well, I have now, we've done the millennial thing where we've raised awareness about the problem, and now we can let someone else hop in and solve it for us.
Well, hopefully getting the conversation going will get things moving.
Well, really quick before we wrap up, I wanted to talk a little bit with you about Earmark and sort of what's going on, because I do think that's an important piece. Whenever I think about education, it's like it all comes down to flexibility and making sure kids are, not just kids, but anybody in this profession is able to do some stuff more on their schedule. So can you talk a little bit about Earmark and what you're building and what you're trying to do over there?
Absolutely. So Earmark is a mobile app. You can get it on the App Store, on the Google Play Store. Just search Earmark, and you can get CPE for listening to podcasts like this one. And we're really proud to have Anders contributing content to Earmark. My own show, the Accounting Podcast, is on there. You can earn CPE for listening every week. And the goal is just to make it super easy. You listen to a podcast, you take a quiz on the app, and you get your CPE certificate. It's all self-study courses. In some states, you can do your entire CPE requirement on Earmark. And it works for CPAs, CMAs. Enrolled agents can earn CE credits from the IRS for our tax courses. They allow you to get CE for federal tax and ethics courses. And And even abroad, if you're a chartered accountant in the UK or in Australia or New Zealand, those licensing bodies typically accept NASBA credits, which is what we are licensed to provide. So yeah, it's just it's a problem that I had myself. Like, how do I get my credits? I don't want to go sit in seminars, and I don't want to, for 8 hours a day to do this. I don't want to sit on webinars over and over and over again. So I thought, this generation wants on demand, right? Let's make it on demand. So that's the idea. Earmark, go get it on the App Store.
Awesome. You're clearly a wave maker and a problem solver, and I love it. Thank you so much for coming on here and having this discussion with us. We always do like to wrap up our podcast with something just kind of totally different, but we want to hear from you. What is the best piece of professional advice that you have ever received?
It was from Bruce Phillips, who bought my bookkeeping practice back in 2015. He's a partner at Aprio. He said to me, the most important thing in life is relationships. And I think he meant it in a business context, that it doesn't matter how good you are at your job. If you have the right relationships and you maintain those relationships, you will be successful. And it took me a long time to realize that. And I did not spend enough time early in my career developing relationships, networking, all that, stuff. But once I sort of realized just how important it is, I started focusing on it. And I view it as just, I want to work with people who I'm friends with. And so I look for friends that I can work with in this profession, and I figure out how I can do that. And if that's building relationships, right? If you do that, people want to work with their friends. They don't fire their friends, Same thing with your clients, right? If you're friends with your clients, are they going to fire you when you make a mistake? Are they going to go, find another provider who's cheaper a little bit, bid you out every single time? No. And that's why the most successful partners have a lot of great relationships. So that's my advice. That's the best advice I've received anyway.
I love it. I think that's so true. I think it applies, like you said, not just to professional relationships, but client relationships, personal relationships. I mean, that really goes and applies to a lot of different facets of life.
Yep.
Yeah.
Well, Blake, thank you so much for joining us. I think we're almost to the top of the hour here, which I think we could have kept going on this for a lot longer. So my hope here is that we can catch up again down the road, year from now, and start talking about all the things that are different from this conversation. Hopefully it starts getting better.
Anytime, Joa and Hannah, this has been a pleasure.
Cool. Thank you so much.
Awesome. Thanks.
If you're a young CPA looking to develop in their careers, we're always looking for great people. Visit our website for remote work opportunities with Summit Virtual CFO, or find all our open positions at Anders CPAs and Advisors.